All right, what's up, guys? Pretty crazy day today, so I just wanted to give a quick little update as to my thoughts and where I foresee the market going from here. We're also going to discuss a little bit of psychology too, mostly pertaining to recency bias. But let's just go ahead and dive into it, right? So, as of the past 3 months, we've basically just been going inside of a range for BTC, right? This is roughly how I'm drawing the range out. I might just be drawing a little bit higher, right? So something along these lines is how I'm perceiving the range as of the past 3 months, right? Now, context matters here because this 3 month long range is no different really than this 3 month long range or than this 1 month long range. It's more similar to this 3 month long range, but regardless, right? During all of this range, as well as that range back in March slash April, as well as this month long range in May through June, we've essentially just been downtrending ever since November of 2021. Right now, this is the high time frame analysis. It's just not actionable, right? Because if we're using something to understand this idea of, hey, the very, very, very high time frame is downtrending, right? Because again, per my 4 second rule, you should be able to look at this chart within 4 seconds at any given time frame and be able to tell me which way is that chart headed, right? And congratulations, that is technical analysis, right? You just told me the exact same everything that you're about to watch for the rest of this video. I just gave it to you, but I'm just going to give it to you in a more detailed and actionable manner, right? But at the end of the day, this price can either only go to this top right corner or to this bottom right corner. So you guys tell me, which way is this headed, right? It's quite clearly heading to this bottom right corner, whatever that may mean, right? Maybe that means that this is the bottom. Maybe that means 200 weekly moving averages. Maybe that means 13K. Maybe that means zero. I do not know. All I know is we're heading to the bottom right corner on the weekly, right? We can portray that idea in a more digestible sort of manner to give ourselves a way of taking action on that idea, because you have an analysis and there's analysis that is valid, but there's actionable analysis. There's a major difference between the two. So if you want to remain actionable, that means you need to scale assumptions, right? Because something like our 200 daily moving averages, which I'm going to use to portray that weekly trend. Portraying the weekly trend means I already fucking know what is going on, right? I already know that we're heading to the bottom right corner. The 200 daily moving averages aren't telling me anything that I don't already understand. They're just giving me a way of portraying little Timmy's, stupid little concept of, hey, within 4 seconds of looking at the chart, we're heading to the bottom right corner, right? So we can't really negate that argument. Why? Because price action isn't allowing us to, because we're not above the 200 daily moving averages, right? However, if I'm going to tell you, hey, we're only bullish once we reclaim those 200 daily moving averages, which just so happens to be also a break in our weekly structure in the form of a higher high, right? Essentially, what I'm saying is price can go 38% higher and still be bearish. Now, is that a good analysis? Right? It's not good. It's bullshit. If that's the video that you came to watch, you should absolutely fucking click out of this and go watch somebody else, right? But did I lie to you? Right? As far as what the weekly trend is telling us, did I lie to you? No, it's a valid analysis. It's just not actionable. You can't realistically take that analysis and go work with it, especially when you tie in something like emotions, right? Succumbing to FOMO, feeling like, oh shit, here I am at 27K, even though a breakout above those 200 dailies would be massively different and set the stage for a major, sort of bull market esque run. You wouldn't be able to just gradually adjust and shift into that bullish mindset. You'd be coping, you'd be fighting off emotions, you'd be succumbing to, oh shit, what if I buy the top now? Right? It wouldn't be gradual. It would be forcing something on the drop of a dime and forcing something very drastically. So you have to be able to adapt to the time frames in between that, right? So what's the most actionable high time frame analysis at the moment and as of the past 3.5 months is this range. So you have to pay attention to this range. this range in itself is not extremely actionable, right? Because to me, when we test these range lows 5, 6, 7, 8, 9 times, all of a sudden, even my grandmother has this range drawn on her chart, and now it's a lot less appealing to want to trade this range for me, right? Based off of this idea that, oh, every time you tap a support level, it gets weaker. Yeah, that may be true in some cases. And I can find you probably just as many examples where that idea is not valid, just as well as I could find, the same amount of examples where that idea is valid. But it's truthfully just, I chalk it up to, I have 2018 PTSD, right? I have PTSD from Bitcoin in 2018, where I did assume that I was going to be able to just buy the exact same region over and over and over and over again. And the result of that was about a negative 50% downtrend in the course of like 2 weeks, right? So, yeah, PTSD. So I'm not able to justify looking to take action on what is currently the most actionable high time frame analysis available to us, which is just simply range lows will go to mid range and then range highs. Range highs will go to mid range and range lows. We repeat that process until eventually we expand away from the range. This is the last time Merc goes bullish. We only saw a measly 15% push upwards over the course of the next month. From where I flipped bullish last, other than here, right? Because I did go bullish here. We only saw a measly 15% push upwards. Now, this is not what we expect. When we applied this exact same, what I'm going to deem winner's mindset to something like Ethereum, we saw a 60% push upwards. Just go to that really quick. So this is the exact same time frame, exact same sort of range. And when you expand away from that range and Merc flips bullish here, we saw 60% push upwards over the course of the next month. Right? That's more along the lines of the move that we're looking for, a push up outside of that high time frame analysis, that daily range, the range as of a past month at that time, where you would look for, if you're scaling assumptions the way that I do, you would look for a test of your weekly trend per trail, right? So we start targeting 28K, et cetera, et cetera. We only get a 15% push upwards before deviating back inside the range, as well as losing our trend per trail as well. So we're downtrending along these 4-hour 200s. We eventually form a bit of a range, right? We can acknowledge the range. We can also acknowledge the 4-hour 200s. All of a sudden, we reclaim the 4-hour 200s. We also break out above that range. Well, there's your bullish propaganda, right? There's your justification. Price action is quite literally telling us, hey, we're heading to the top right corner now, right? When we look at this price action as a whole, right? Again, that doesn't change the fact that when you zoom out to this time frame, we're still heading to the bottom right corner. It just means that in terms of actionability, there's about a 29% gap before your very, very, very high time frame analysis starts to actually matter, right? Then all of a sudden, when you lose those exact same bullish arguments all over again, you don't have a reason to continue targeting this weekly trend, right? You would imagine that the weakness that was previously a portrayal of weakness for all of these 3 months in negative 60%, that then led to a month long only 15% push upwards, right? And portrayed that trend pretty beautifully. You would imagine that that portrayal of weakness would do exactly what it said it's going to do, downtrend, right? As well as when you acknowledge this range, this is now a deviation. Deviations imply mid range as well as range lows. When we get to range lows, what's the expectation? Range lows, mid range, range highs. Somewhere around here, I think I mentioned on Twitter, or maybe it was in a private Discord with some friends. I can't honestly remember. We're not using the 4-hour 200s as a portrayal of trend anymore because we cared about them. We cared about them. We cared about them. We only got a 15% push upwards. And all of a sudden, we lose them, right? And then price action doesn't care about them anymore. We started to care about an even more local trend, something like the hourly 200s. And that would have been where you start to scale your assumptions. And that starts here. And from there, that's when you can confidently say, oh, you know what? Our range lows probably did act as range lows. They are going to see a push up into mid range, probably the 4-hour 200s too, and possibly even range highs. And then when you get to range highs, what's the new expectation all over again? Range highs, mid range, range lows, right? You can obviously tag in some intra range levels like the 4 hour 200s along with that. I chose not to again because we didn't care about the 4 hour 200s. How did I know that we were going to respect the 4 hour 200s? Well, I didn't. I didn't have anything to back that off of. And then, rightfully so, we just so happened to not give a shit about these 4 hour 200s, right? So we go back into this exact same mindset. We continue respecting something like hourly 200s, right, as a local trend portrayal once again. So that's probably where we would look to scale our assumptions from. So really, the most high time frame actionable analysis, which is range lows, mid range, range highs, I don't give a shit about it because if you're not above this local trend, then why do I care about these range lows potentially acting as range lows for the sixth, seventh, eighth, ninth, tenth time, right? I don't. I don't care. There's no foundation to a bullish argument. The argument remains the same argument that has remained for the past 3.5 months. It's becoming a watered down argument, right? So again, even my grandmother has this fucking 3 month long range drawn on her chart at this point. Whereas your boy Merck had it drawn all the way back here, right? So, I mean, you want to be able to kind of scale assumptions to not have to feel like you are taking a risk and kind of putting yourself in an overcrowded sort of position. So we do that, right? A reclaim of a local trend probably allows for a push up into mid range along with our 4 hour 200s, which again, at this point, we don't really deem all that significant just yet. But then we see the reaction from it. And then we're like, right? We get a push back into range lows. What do you know? Mid range acted as resistance, range lows act as support. Is anyone surprised? Right? Because you shouldn't be. You're not allowed to be surprised when the chart that has been saying it's going to do something for the past 3 months continues to do something. Why are you shocked? Right? And are you surprised that resistance acted as resistance? And even though we didn't care about the 4 hour 200s, we know how well they get respected on a historical basis. So are you shocked that the 4 hour 200s acted as resistance, as confluence to the horizontal resistance that we had drawn on our chart? I hope not, right? And then we head back to our range lows. Obviously, range lows act as support again, pushes back into our 4 hour 200s. Now it starts to seem like, oh, now we give a shit about the 4 hour 200s again, right? We reject off of them. We then, at this point, we're starting to establish another range on a low time frame within the range, right? Which basically is another way of just saying, yeah, we're consolidating in the bottom portion of this high time frame range, right? We're kind of just chopping between these range lows and the high time frame mid range. But even lower than that, right? We have a mid range, right? Range lows, mid range, range highs on a lower time frame. That gets nicely respected as well, right? So when we break out above something like our 4 hour 200s, I actually went bullish here because the way that I had this range drawn previously was where's my thingy? The way that I had this range drawn previously was something along these lines, right? So the way that I saw it, it was a breakout above this low time frame range as well as a reclaim of our 4 hour 200s, which at that point makes me think that yes, finally the range lows that have been saying they're going to do something for the past 3 months are probably going to do that exact same something here today as well. Probably means mid range as well as range highs and who knows, maybe even higher than that, maybe to go on to test our weekly trend, right? Again, we want to give ourselves actionable analysis. We don't want to sit here coping complacent for that entire push upwards into range highs and then potentially above range highs and then at the weekly trend, right? We're being forced into positions rather than having it be a gradual adjustment based off of something that we decided to do, right, gradually and ease into over the course of time via the information that was being shown to us. And the difference is doing that, taking that approach and feeling forced into a position, right? You never want to feel forced into a position. That's why we zoom into these lower time frames and remain actionable or look to remain actionable, right? But from there, we only get a 3% push upwards. So last time I said this, I was saying it satirically. We only got 15% over the course of a month, right? The time before that, we only got 20% over the course of, 3 weeks. The time before that, we only got 10% over the course of, a couple days or so, right? And I'm not going to go over why we didn't, acknowledge this time and some other times as well. But I have videos on all that stuff actually, at that present time. So you can go watch those and see for yourself. But um, we see the strength that we saw the other three times that I've only been bullish on, the past year. I've only been bullish on this market or on Bitcoin on a high time frame four times as of the past year, with the fourth time being this time. But now when I'm going to say, hey, we only got 3%, I actually mean it. 3%, there's no way I can spin that around to say, oh, we only saw 10%. 10% is still a lot. I still made money. I still won, right? There's no way I can do that with a 3% move into mid range and then losing every sign of strength that we had established into, forcing me to be bullish once again, forcing me to adjust to these lower time frames. There's no way I can spin that around and claim clout on that analysis. There's just no chance, right? It just so happens to be that the same winner's mindset that allows me to be bullish or has allowed me to be bullish the only three times when you zoom out to that weekly chart and you see something that isn't just straight up down, that exact same winner's mindset didn't reward me this time. So what does that tell me? That tells me that I need to adjust, right? I need to adapt into a different mindset. And that's why I redrew this range to give myself a way of portraying the new sort of adaptation as to how I'm going to approach this market moving forward, right? Suddenly, we went from not giving a shit about the 4-hour 200s, giving a shit about them. We still saw them get respected as support, right? To all of a sudden, we only got a 3% push upwards as a result of being bullish, and that stemmed from a lot of, that bullish argument stemmed from those 4-hour 200s. And then we broke back down again, right? And that breakdown, truthfully, is not really all that significant. It's about a negative 6% expectation back into what is now mid range, what was previously range highs, right? And range lows, which have stayed the same. And it just so happens to be the high time frame range lows as of the past 3 months as well, right? So all of a sudden, based off of a new showing of weakness, right, after showing strength and immediately losing that strength 3 days later, right, you're now able to expect a negative 6% drawdown. Is that something to cry home to mom about? Right? Oh my God, I managed to not lose negative 6% on my trade or on my account or whatever. Right? I would hope that as crypto traders, we're all kind of numb to this 5%, 10% sort of swing on an asset that probably, if I had to guess, has an average daily range of about 5%, right? On any given day. It just so happens to be that as of the past 3 weeks or so, we've been trading in really 9% range. And even more than that, I would say probably 80% of the past 3 weeks or past month, we've been trading in probably more along the lines of like a 5% range. So now when we put that in context, this move feels absolutely fucking massive. It's called recency bias. It's attributing a higher degree of significance to something that was more recently said or occurred than anything else that actually is more significant. Just because we managed to sweep the lows, bro, and tap the exact same high time frame, range lows that we've been tapping as support for the past 3.5 months, and the same exact low time frame range lows that we've had as of the past month, right? And we managed to bounce a whopping, what, at this point, 6%, 7%, something along those lines. That doesn't really set the stage for a new bull argument on high time frames now, right? So Merc, what does? What all of a sudden shifts us bullish? What forces us to consider this to be a sweep of the lows and not be a meme, right? And run it back turbo and send this thing to range highs finally, because that's what it's been saying it's going to do as of the past, 3 months and more recently a month. How do we how are we able to adapt into that? Into being actionable so that by the time we get to those range highs at 22.6k, or we get to the local highs at 24k, or we test the weekly trend all the way up at 28k or whatever, we're not forced into a position. Well, you have to adapt, right? You just have to. And at this point, because of the lack of respect for the 4 hour 200s, we have to sort of adapt, right? So we redraw the range. So the way that I see it now is we're testing the mid range of this local range. If we reclaim those 4 hour 200s, I'm not really going to care all too much. I don't really care if they act as resistance, magically, or if we break out above them. It's not really going to be a massive shift in my bias, because last time we did the exact same thing and it meant absolute fuck all, right? So really, all it would be is, well, yeah, obviously, when we're above the 4 hour 200s, that means that we have an even more, higher probability for us to reach this range high, or the high time frame mid range, which are confluent with each other. That's all that means. But the only thing that would allow me, right, to actually shift bullish is if the snowball of bullish arguments, which we're currently seeing, continue to roll their way down the hill, eventually into reclaiming this mid range as well as reclaiming these range highs. That then means, hey, the strength arguments that we are seeing as a result of tapping the range low for the past 3 months for the 87th time, right? Yeah, it's starting to become an even bigger bullish argument. We need to adapt into that mindset. We probably want to ride that wave, right? It's probably significant this time around. And then you would go from there. Obviously, if that never happens and our expectations hold true currently, which is the expectation is range will just continue ranging, right? So again, you can apply that understanding to this low time frame range. And what does that mean? Range lows, mid range, range highs, right? And if you're applying that to the high time frame range, that also means range lows, mid range, range highs. So we don't care about this high time frame range, because at this point, we need a more actionable sort of way of approaching it so as to not get caught out on moves like this, even when in hindsight, the range is still respected. I haven't traded a CPI day ever, I don't think. Maybe once in the past year, right? I haven't been trading CPI. I cannot honestly tell you that in good conscience and still fall asleep with myself, at night, totally fine, peacefully. I can't honestly say that I trade this and buy these range lows for the 89th time around and make money. I can't tell you that, right? Because I just honestly can't. So the expectation is still holding in terms of actually managing to take action based off of those expectations. It's still wonky, right? It's all over the place. That's the way that I'm seeing it, at least. And this price action to me is a nice little understanding that, man, good thing I didn't trade today, right? Good thing I managed to go do something else, play with my puppy, who you probably hear in the background right now. Um, right? I'm glad that I didn't trade this sort of price action, because we're just doing the exact same thing that we've been doing as of the past month. It's predatory. It's out to get you. It's here to make you think that we're going to 17K or 12K or 10K and then 30K the next day. Or in this case, the next 4 hour candle, right? Give yourself a way of approaching things in a proper sort of winner's mindset. One that allows you to understand probabilities based off of what the chart is physically telling you, the same way that the chart is physically telling a fifth grader the exact same thing. Take that at face value, apply a winner's sort of mindset. It doesn't have to be my system. You can substitute whatever you want for a trend sort of indication, market structure, whatever, right? Ichimoku, it doesn't matter. It does not matter. You just find a way of approaching things in an actionable manner, being able to scale assumptions from one time frame into the next, and I'm sure you'll do just fine. Don't fall victim to emotions, anything of that nature. And yeah, I hope you guys enjoyed this little recap. Really quick before I go, I do want to say that last month I created a Bybit giveaway, or not Bybit giveaway. I created an iPhone giveaway and I ran it through Bybit. That giveaway just concluded as of 2 days ago, I think, or yesterday. We announced a winner. It took forever because I'm doing things the proper way so that nobody can say, oh, this was rigged, right? It's not rigged because I literally have my Bybit account manager picking somebody through user ID on the back end, and then they are going to ship the iPhone out to you. So a winner was announced. Congratulations to that winner. I'm not going to say who it is, obviously, for confidentiality, but yeah, I'm going to continue doing Bybit giveaways or giveaways ran through Bybit. But at the moment, because we got so many people to sign up, Bybit is actually allowing me to give you guys a pretty sweet deal, which is if you sign up through my Bybit referral link and you deposit $10, you get $100 BTC USD airdrop. So that means that you can go take that $100 and go trade with it on BTC USD perps on Bybit. And whatever profit you make from that, you get to withdraw. It's all yours, right? So deposit $10, get $100 airdrop. Pretty damn cool. So thank you to Bybit for allowing me to do that to my following, my community. I think that's really sweet. Also, signing up through my Bybit referral link is the best way to support me. So if you find value in these videos, am very grateful if you guys sign up through that link. That is 100% the best way to support your boy. So with that said, thank you guys so much. I hope you enjoy the video. I hope everyone's staying calm, cool, collected, and not getting liquidated because I need you on my ref link, right? No, I'm just kidding. Much love, everybody. Take it easy.